Welcome back to the RealWise podcast. I'm your host, Stephanie Johnson, and today on the show, we have the amazing Barbara McDonough. Barbara is a 22-year veteran home lending advisor with Chase Bank. She's a 5-time winner of the National Achiever Award at Chase, finishing in the top 2% of all Chase lenders nationwide. Her background includes successful careers as a CPA, a tax manager, and a corporate finance analyst. So she has serious depth in the world of finance. She's a sales leader in the Bay Area, an enthusiastic cook, a grower of flowers, and a mother of 2 daughters. And she is my go-to for all of the information that I need when it comes to the financial piece of the real estate business. Welcome, Barbara.
Thank you for having me here today. I'm thrilled to chat with you.
Yeah, I'm happy you're here, and thank you for coming. Okay, so I think we'll start with my favorite question to ask you.
Everyone's favorite question.
Which is, how's the market? And in particular, how are rates today?
Well, I think how's the market? The answer is, how do you want to view it? Historically, we are at an all-time high. So roll it back to 2002. And at that time, rates were at an all-time high.
Yeah.
And we are above that now. So some perspective, 2002, the average fixed year rate was just over 6%. Now it's just over 7%. This is just an average, maybe, Freddie Mac kind of survey data. Mm-hmm. But I also like to remind not just customers, but agents, about 30 years ago, the average rate was 10. About 40 years ago, the average rate was 13.
Mm-hmm.
And I think you and I both have the benefit and luxury of having clients who have had real estate for long in their relationships with investments, and they've experienced these things. I personally have never owned a mortgage at a high rate like that. So Here we are, a lot of new ground for not just customers and buyers and sellers, but also for agents and lenders.
Yeah, we've always been working in a declining environment.
Yes,
yeah,
exactly. For me, started in 2002,
mm-hmm.
right at that time. So I think that, how is the market? Just very different. So I think different things to focus on right now for customers, and how do we present that and help them navigate through this time?
Mm-hmm. And rates today?
Rates today, so the average is around 7.
Yeah.
And I just say average because it's a nationwide average. So, but still, I think there's a lot of value out there, and really focusing on not just the rate environment, but the housing environment too. And that's where being a team with your agent is so important. Where is the customer going to get the value? We can't get a 5% rate or a 4%. It doesn't exist. So where can the value come from? And that's where the partnership, I think, with the agent is critical, because you know what's on the ground. What are we looking for property to property, and filling that gap to try to value there instead of in the rate.
That's right. Yeah. I know the Fed yesterday decided not to raise rates again. Are you relieved?
I'm not surprised.
Mm-hmm.
I think it perhaps is an indicator that they feel like their policies have been working.
Mm-hmm.
Overall, if you step back from our economy, unemployment's low, things are working. Is there confidence out there? Maybe, maybe not. So I am relieved. It'll be interesting to see if they can hold that for a bit, and then maybe if policy is still doing what they want it to do, when are we going to see some relief? Is there a possibility of that? And that's really what I'm talking to clients about now. Anybody that I worked with from June of 2022, I'm saying, I'm going to be calling you, as soon as the time is right. We just don't know when it's going to be. It's hard to know.
Yeah. And they have not said that they've stopped raising rates. They just didn't do it this meeting.
Which is a lot to say.
Yeah.
By not saying that. But, we'll have to kind of monitor that. But again, that's only one piece of the puzzle.
Yeah.
In terms of your investment in real estate, I think. An important piece, of course, but also a changing piece, because, I tell clients who are buying now, this will not be your final loan on this house.
Right.
You will refinance as long as the numbers work. We will be working together again to save you some money.
That's right. I mean, you will refinance. I think the trick is just, it's so hard. I talk to clients all the time who want to move up,
mm-hmm.
or, are living in a place that's a little too small for their current lifestyle. And they've got a 3% rate or somewhere in that ballpark. And they're looking at, a move up, which means maybe they add 50% to the purchasing power, but they're adding 100% to their mortgage costs because they're having to take on a higher
mortgage
at a higher rate. Yeah. And so it's just, we have this gridlock in terms of inventory on our side that we're seeing. It's hard to figure out how to get people to shift and move and do what's really in their best interest and not focus on the rate so much. It's a challenge right now. Yeah.
It is. You're right. So the conversation has to circle around other factors. What other income factors do they have? Maybe this property that they're exiting can become an investment property. So you become more of sort of the armchair coach on a lot of other factors in the life, not just this purchase.
Yeah.
Because it has to all fit.
Yeah. And that's where partnering with your lender can come into play, because there may be solutions on the lending side that you are not aware of that buyers and sellers can take advantage of to sort of bridge the gap between purchases, to hold an investment property, to borrow equity from their current property and purchase the new house. I mean, again, it's just the partnership is so important. And so the Fed did not raise rates. They didn't really give an indication if they were finished or not. I mean, I know you get a lot of information as a lender. You're privy to a lot of information and interpretation of what's happening in the greater markets. I mean, what do you see and what is Chase anticipating in terms of the end of the year and the first quarter of next year in terms of the rate environment and lending policy in general?
I think that there is no straight answer to that, Stephanie. And,
What?
And I won't speak to, what my company policy is or thoughts are at this time, just because it's ever changing, really. So I try to just give people the background in terms of where we've been and where we are today. Because at the end of the day, if you want a better house for your family, or if you're going to be relocating because your job, you need to make this move regardless of what the rates are. So economic forecast, not sure. I think that we'll probably be holding steady for a bit, and then the Fed's going to sit back and reassess again and again and again.
Yeah.
So I do think that customers are way more comfortable, or at least resigned to the current state of rates. I mean, back in Q1 of this year, I felt like there was a very hard stop. Like it was just shocking.
Yeah, absolutely.
I mean, to even utter the numbers that we had to quote at the time was difficult to hear. So I think going forward, we'll see some more momentum on it. I think with this pause, that's really good news that we've got some relief, and then we'll, take it from there.
Yeah. And on the, sales side of things, I mean, we are seeing price recovery in almost every market in the Bay Area. I mean, not a lot, but over, when we compare spring of this year to spring of last year, I think on average, we were off around 20%, especially in San Francisco and San Jose metro area, sort of the greater South Bay, and San Francisco area. Now they're saying, at least San Francisco, we're off more like 16%. So we've seen a little price recovery, which is nice. And in other counties, I also work in Sonoma County, and that's fully recovered from the dip in the late 2022. And some areas of Sonoma County are outperforming the high point that we saw in 2022. So that's kind of on trend with demographics as well, and the shift away from, more people being able to work remotely and live where they want to be.
Right. Right.
I think the thing I hear most from buyers right now, especially if they're first-time buyers, is, well, I have to wait for rates to go down to buy because I can't qualify for the house that I want. And I think I know what you're going to say, but yeah.
Well, so part of it is inventory, right? What's available and where the options are. And so because interest rates are higher, that impacts qualification. How much will a lender give to you? Yes, that's a hard fact.
Yeah.
So at what rate can you top out? We do have a program that allows you to lock before you find your house. And that is something that is, if you think about someone who's sort of limited in terms of how much they can borrow, if rates go up, then all of a sudden your borrowing power goes down. So it's a tool to keep your borrowing power where it is based on a lock prior to getting. So there's some things like that. But if you are at that point and the rates go up and you don't have a lock capability, then you're stuck. I mean, you have to have more cash or you're buying a lesser valued home.
Right.
But assuming that's not your, footprint, then really it's about affordability. Because I have plenty of clients that we approve for loan amounts that exceed what they really want to spend. And that's intentional, just to give them, number one, the information, number two, some opportunity if they want to reach a little higher. But that doesn't mean that it's affordable for them. Like, correct. What are they comfortable with? And that's really what I'm asking clients to focus on right now, is I'm going to max out the loan so that they have these options. But with these higher rates, how does that feel with your budget? Because I don't have a view to, what your other expenses are. I don't know. I mean, I don't know what you need to spend for your family or travel or what have you.
Yeah.
So where does that all fit in?
Mm-hmm.
So that's the hard choice. It's not just the rate, but like, what is that monthly payment? Forget about the rate, but can you do the monthly payment? How long can you sustain that until a hypothetical refinance comes along?
Yeah.
Is that 24 months? Is that 36 months? Play it out, run the numbers to see where are you comfortable, where are you not. I think that's really helpful in terms of deciding, can I make the move at the house at this level?
Yeah.
At that monthly payment.
Totally. I agree. And partly what we're seeing too is that, because we have this gridlock, people aren't moving, people are kind of holding their sexy mortgage rate
Yes.
in their current home and afraid to sort of make them move and bite the bullet and take the higher payment to have the house that they need for their current lifestyle. We're seeing this inventory getting tighter and tighter and tighter. And so the few homes that do check a lot of boxes that come on the market are starting to sell for more and more money. And I think as soon as this rate environment gets more hospitable, we're going to see a frenzy of demand, pent-up demand that now suddenly we have maybe more inventory, but a lot more buyers in the marketplace trying to purchase. So I don't know that waiting is really it. And certainly I think this winter is going to be a really beautiful opportunity for people who want to get in. I think people get distracted. They don't, by the holidays and the end of school and all the things and travel. And if you're willing to look through November, December, January, I think there are going to be a lot of really interesting opportunities to sneak in before this market starts to pick back up next spring. So that's my advice to buyers who are really a little rate sensitive and a little timid about jumping in to this market.
Well, I have personal experience with that. My first home that I bought, my husband and I had been looking for a long time, typical Bay Area couple, and I gave up. I just told him, I am done. I can't do this anymore. And it was that time of year and it was raining and it was horrible. And he found a house. He said, I think you should come and look at it. And I walked in the door and I said, yes, let's buy this house. And so that's how it happened.
Yeah.
In that time frame when it's
great.
A little bit less competitive buyer wise.
Yeah. My first house, I also bought in December. We closed in middle of January and it was raining. And I think it's a great time to buy a house. You see if it's watertight. I mean, there's so many benefits to buying in the winter, less competition, more information about how it's going to do. So good for you. Yeah. I think it's a great opportunity and we're going to have a little September, October bump and then it's going to quiet down. So why not get out there and start looking? So because fewer buyers qualify, I'm wondering if you could quantify for us the number of loan applications as compared to the height. What percentage do you think loan applications have come down since this environment changed?
Yeah, that's a very interesting question. I would guess at least 50% come right off the top.
Wow.
And probably half of that, though, is related to refinance. Like that activity is done. Like it's pretty much done. I mean, there are customers that would like to do cash out, even though the rates are higher, they need some cash. That's happening here and there. So if you say overall 50% cut, half of that was refinance.
Yeah.
It's now 100% purchase, but at that reduced rate. So it's just a completely different environment. So there's that many customers still out there, but it's a smaller, tighter bag. Yeah. So
do you think that, if you took the refinance piece out, that overall loan applications are down for purchase?
I would think so. For me personally, so I'll speak on that level. Definitely, the activity is down in total. And we just came off some really big years, of course. So not particularly apples to apples. If you look at through COVID, where there's so many families making moves. So we were particularly busy at that time. So maybe, that first year, the slowdown was a little post-COVID. Now this slowdown is more inventory and rates. Those are the two sort of competing factors that are really changing the marketplace right now.
Yeah. I mean, I think inventory is obviously down. We talked about that, but also closed transactions are even lower. I think they've ticked up a bit in the last few months, but they've been down, I think about the same, about 50%.
Right.
Yeah.
Right. And that's the relationship. So, I mean, in our business, and I'm sure in yours, like the more customers that we can get it pre-approved and apply, the higher chance we have of getting these folks into contract. It's just a numbers system, if you will. So that's where you'll see that relationship, the conversion ratio, we would call it, between applications and closings. And I'm just finding that for us and probably for you, the inventory is the factor really in what's slowing things down, or the affordability, like we talked about earlier. People really not comfortable pulling the trigger on it, even though they're approved. There's a perfect house, just can't get comfortable. It's not going to work for them.
Yeah. They're just looking at how that's going to eat up a big portion of their income every month. Yeah. And they're not really ready.
Or their savings that they're trying to, apply in other areas of their financial portfolio.
Makes sense. Yeah. I mean, I think it's really important because this podcast is geared towards agents, obviously, and helping them sort of have more efficient businesses, more abundant businesses. But also right now, I think a lot of agents are in a place where business is down. I mean, I think for the majority across the board, not everybody's business is down in certain areas. Some listing agents are doing really well. Like in Sonoma County, listing agents seem to be doing really well. But in general, most people's business is down. And so I think there's this sort of not wanting to really fully talk about that and how that feels. But I hope that this conversation validates some agents' experience, which is just that it's not just you. Lots of people's business is down, including your lender partner who is seeing this huge dip in applications. You've been hit times two because it's not just a purchase money, but it's also refinance money. And so it's a 1-2 punch. So I think, I hope that this conversation helps agents feel a little more comfortable and starting to talk with their lender more about, ways to partner together to get business. I think there's all kinds of ways that you can explore, growing your business in partnership with your lender too.
Yeah, I agree. I mean, with each client, there are different opportunities and every client, has something to bring to the table and some things that we need to bring to the table. So we have to get creative and, don't fall into the myths. I mean, don't need to have 20% down, not even on a jumbo loan. There are different tools out there. Whether or not you qualify, well, let's figure it out. And that's something that, as an agent, a newer agent, having your lender partner, just knowing that they know their guidelines and they will explore those options with each client on a singular basis. Because you don't want to leave anything on the table for a customer.
Yeah.
And that's really important that you kind of have a can-do attitude, I think. And that's one of the factors that I would encourage an agent to have a lender that is, not well, we can't do this, but how can we get this done? Maybe we can find some middle ground. Maybe there's a solution for the customer too. Super, super important to keep that creative side, even though it's finance and banking, open so that you can find some answers for your customers.
Yeah, that's a great segue into sort of, talking more about how to choose a lending partner, because this series is about, building your team as an agent. And certainly you're one of the crucial people on my team. That I call for advice. I send clients to who aren't quite sure what they can do. When I need to get creative, you and I get on the phone and talk through it. And so I wonder if you could just articulate a little more kind of green flags to look for when you're partnering with a lender as a real estate agent, partnering with a lender. What sorts of qualities should that person offer your partnership?
That's a really great question. For me, and I took some notes, I think that just try to be knowledgeable, have a lender that's knowledgeable. And what that means in our business is, do you know the guidelines? I mean, the rules are voluminous. It's a dictionary, encyclopedia, I should say, and it changes all the time. So it's hard to keep up on those rules, but really knowing what questions to ask. When you start to talk to a customer, ideas and thoughts should be going in your head to kind of, and those are all steered towards the guidelines. Would we qualify for this? Do I have an issue with, whatever particular rule that I'm thinking of as they're discussing with me. So having a lender, that is committed to that. And, that's not tedious stuff. That's the law book for us. That's the exciting stuff.
Yeah.
And you want to have someone who's into the minutia, I think. And you can't know it all, but you have to know what questions to ask or know when you don't know. So having a lender that, is okay with that thought too. Like, I don't know, but I'll find out for you. I think is key. Because it's easy to make mistakes in our business, not just lending, but, across the whole platform of it. And you just want to be really dedicated to finding the right answers all the time.
Yeah.
So that's the knowledge base and commitment to that. I think the other big one for me is to try to be as responsive as possible. So, that's not just speed, but also accessible to customers. I have some customers, they really can only talk on Saturday morning. Their lifestyle with work and kids and that's fine. So really trying to accommodate the customer's needs that way and being open to that. And it's not that I'm working 24/7. Of course, I'm going to have some downtime too, but also knowing that you need to fit that responsiveness in, and working with a lender that's willing to do that. I'm actually kind of surprised when some lenders don't.
Yeah, some you can't get them on the weekend at all.
Exactly.
Yeah,
and
which, I understand. Boundaries are great.
Right.
I'm all about boundaries, but there comes a time where you have to know when to open the gates to get things done, and then have other reasons why you don't pick up the phone.
Exactly.
Yeah.
And then as a lender and as a realtor, the communication style, that's a personal thing, but you will. I think your gut will tell you, like, can I work well with this person? Like for me, I really work well with, I like professionalism and courteousness and being polite and professional all the way, like all the time. So it's not to say you can't have fun, but there's certain folks that will communicate and resonate with you. And that's a valid thing. So as a realtor, I think it's okay to make choices based on personal communication style and who you're got to be comfortable to refer your clients to that person.
Yeah, I agree. Being articulate. And also lending can be really confusing. There's a lot of acronyms that even now I'm in my business a long time, I still forget what they mean, because lending is not my piece of the puzzle. You really require that lender, because that's a blind spot for when you're working with a buyer. You don't have any visibility into their financial picture. Very little. You probably know what they're going to put down and maybe about a range they're comfortable in. And that's kind of it. You don't understand all of the other nuance involved in their full financial picture. And so you really need the lender to partner with you in a way that doesn't disclose information you shouldn't have, but gives you the information you need to protect your client when you're writing contracts. And that, I find that sometimes gets skipped, and I'm sort of hitting it, like asking a lot of questions because I'm still not confident. And I think one of the things that I think works well with you is just, you make me feel really confident. You can distill the risk exposure and what you've done to mitigate it so that we can make a decision about how to move forward. And so I just really appreciate that. And I think that's one of my biggest requirements is just communication, clarity, and being articulate, being able to explain this behemoth, set of guidelines and things that, of course, as agents, we want to blow through, and you're able to really distill it to something that's really understandable and easy to digest. So, yeah.
Yeah, I think this is a very important point. I mean, customers, this is where we have sort of a wall between us, if you will, right? I'm protecting their private information and working, with that in mind with those rules. But at the same time, with their permission, making sure that you understand, like, this is what we're approved for and what they can and cannot do. So we need to sort of balance the clients and their private info and what you need to know to help them be successful too. And the client sits right in the middle of that and gives us the okay to do that. So I do try to be clear on that, because there's a lot of risk when you're writing a contract. Totally. And I want to keep our clients safe. And I know you do too. So it's super important that we slow down and make sure that we've got that piece right. Because without that, we really shouldn't be writing a contract.
No.
At least in my opinion. You're the agent, but.
No. I mean, my favorite place to be with a buyer is that we can be really aggressive on the terms, because we know they're completely buttoned up behind the scenes and there's very little, if any, risk. That's my favorite play. We can't always be there with a buyer because some buyers need to reach high enough in their range that there is some risk, and we won't go into all the details of why that might be. But once they get they're pushing themselves a little bit in terms of the purchase price and the borrowing amount, the loan amount, the other things come into play, and we have to put things like appraisal conditions in and things to protect them. And so, but it's such a nice to go into a contract writing with a buyer and to know exactly where their limitations are and how we need to address them to keep them safe is, it instills confidence in your clients as well. So, yeah. Yeah.
And I think that's that's a proactive quality that I think is key for a lender to have. And something that I think realtors should expect, honestly. And what you just described is sort of this buttoned up, I think is an excellent place to be as well. And having that be one of the things that as a realtor, when I choose a lender, that's what I want. I want that kind of mentality of someone who's going to make sure the customer knows their risks. It's communicated professionally and privately with the agent, and it's proactive. Like, it's throughout the process as well, too. Keep that status going. And I know we'll probably talk a little bit about how we all work together as a team. But things change during a transaction, even a short one,
Yeah.
And so
we've had that happen.
So we all need to have that proactive, professional communication just to keep everything on the train track.
That's right. Yeah. I'll add, I have a little list of my own too. I mean, I don't want to take on as an agent a lot of the education around the lending piece. I really want to partner. And this is part of my whole goal about running my business with good, high quality partners, because then you can let go and let them do their job. And you're just from a distance, just making sure they're checking the boxes that need to be checked. So for instance, I know agents that sometimes will be making up this difference they're not getting from the lender by explaining the the closing disclosure or going into detail. And I really value our relationship because I know 100% that you're going to be doing that with the clients, that they're going to be understanding the lending piece. They may have a question they might ask me, and I know I can confidently kick it to you and say, I could guess, but Barbara is the person to go to talk to about this. And then we get it solved right there on the phone. And so I really think, the education piece, lending is complicated, as you said in the beginning, and they need to know what all their options are, what all their exposure is. And that comes from the lender really, again, knowing their whole business and being able to articulate that succinctly to a client so they feel confident. So that's one of the things on my list. We talked about reliability in terms of, picking up the phone and being accessible, but also just timeframes. Can you anticipate timeframes that you'll need for conditions in the contract? And then do you deliver on those timeframes? I think, it's so stressful to have things come in late, have things get bungled, and then we're closing late and we're trying to finesse that on the backside rather than just know we're working with timeframes that are reasonable. So I think estimating and delivering on those timeframes is so crucial.
One of the things that I'll throw in on my list is having a lender that takes ownership. So I'm talking good news and I'm talking bad news. And sometimes things do go sideways on transactions for many different reasons. But knowing you're working with somebody that will own up to it, raise the flag, this is the problem, say it out loud, and here is the solution. This is what we're proposing to move through this. So that is a hard earned skill, I think, for a lot of new people in the business, but one that I think agents should expect out of their lenders and other partners as well. So really knowing that you're on the up and up to own it all, good and
taking
bad.
Responsibility,
Absolutely.
Right, for the whole transaction.
Absolutely.
And also, for anything that gets, we're human beings. And so I think trust is built through accountability, right? And so, if we miss something, then we immediately alert people that need to know and we get it fixed right away.
Absolutely.
And take responsibility. I think, time and again, we all have experience. We can't be in this business as long as we have without experiencing the opposite and how unsafe and sort of stressed people feel when that starts to happen. So I agree. Yeah. On both sides.
Right. And I think collaboration is also key on, at least on my list. We all have our own lanes in this transaction. But you don't work in a vacuum. So the things that I do in the transaction, which I'm responsible for, do impact everybody else, on the other spokes of the transaction. So keeping that in mind. And maybe you should be telling people what you're doing, because they would like to be updated or it has an impact in a certain way. So being collaborative and just the spirit of that, it's really important to me. And I think that makes for a good relationship with your realtor partners.
Maybe we should talk a little bit about specific stories. That might help to kind of hammer these points home. And I wonder if you have any stories about, collaboration that were either ended good or bad and that you'd like to share.
Sure. Well, I put together some thoughts on sort of what are some of the things that can surprise you in a transaction. And there's some simple things that in collaboration that could be easy, but are not. So for example, sometimes contracts change, prices change, credits change, terms change, timelines change. And I haven't been told.
You mean the real estate agent changed them and didn't tell you?
That actually did happen. Not with you, of
Only
course.
one time.
So you'd say, wow, that's really basic, but it can happen. Why? Because we're all sort of trying to juggle quite a few things at the same time, right?
Yeah.
So that's a basic thing on collaboration that I have experienced, but I also feel like over the years, I've recognized that can happen. And also on my part can be more proactive to help prevent that, doing more check-ins with my partners.
Yeah.
Just small things. And then everything seems so much more smooth because of it. So not too dreadful of a story. So how about you?
Oh, well, I think you and I talked about this once offline before, but I had a client a while back that was divorced, in quotes, and I wrote an offer on a property for him, and we got into escrow, and he removed his loan. He had a loan condition. I think we had a loan condition going in, and then he removed it, and then I got a call towards the end of the escrow from the lender saying it wasn't you. He'd chosen another person to work with based on his relationships, and the lender said, well, he's not divorced. And the paper, he says he's divorced, but the paperwork hasn't been, it hasn't been filed.
Stamp.
It's not finished.
Right.
And so he's technically still married. And so we need a quick claim from his, quote, soon to be ex-spouse. And, whatever happened behind the scenes, I don't know, but we did not get that. And so we ended up not getting that loan. His deposit was at risk.
Oh,
and so I got him hard money, and he closed with hard money, and then he finished his divorce and refinanced. So it wasn't a horrible thing. I think the hard money was expensive for a little while however many months he had to hold that loan.
Right.
But he got the property, and it was good because he bought it at a really good time in a market that has continued to appreciate. So he's more than made that money back,
Of course. Yeah.
which is great. And I think he was thrilled with being able to close on that property. But, I, and you helped me understand this, but I at first wanted to sort of blame the lender because, she didn't know. And aren't you in all of his financial stuff and his bank statements and everything? And you had said to me, we don't always know this stuff. Like we ask a lot of questions, but sometimes things like that slip by. And so I wonder if there are things like that can slip by that maybe agents and lenders in partnership should have like a hit list of things that are just huge red flags that we should be sort of proactively rooting out as we're in conversation with clients that can, help avoid that situation.
Yeah. I think actually that's a big one. Marital status on paper is different than current relationship status.
Yeah.
And so when
in
you're
your
talking
mind.
to clients, they'll say they're divorced, and then they fully intend to, they're being truthful in a lot of ways, but the actual paperwork's not done.
Yeah.
And a lender, it makes a difference. So I do kind of carefully navigate those conversations.
They can be touchy.
They are touchy, but also just being, empathetic and pragmatic, and these the facts are the facts, and people understand. Another one that came up for me recently was, do you own any other property? And you think that's a pretty simple question. So we go through the loan process, and then it becomes uncovered, if you will. The customer actually does own several other properties, but only because her parents, however many years ago, put her name on the deed. So she doesn't, in her mind, consider those her properties. They're her parents' properties, but she's legally an owner of that property, whatever percentage. So we end up having to sort of peel back the onion on it, get the property information. What are the costs of those properties, the taxes, the insurance, and include them in my calculations. And so fortunately, they didn't derail the work that we had done together. But just as an example, if someone's like, they're being honest when they fill it out, but they just don't consider that theirs.
Yes.
It's their parents.
Right. So, and they're not understanding, because this is a complicated process. The nuance between having your name on title of something does mean that now that piece of property needs to be vetted as part of the full financial picture
of your assets. Yeah, exactly.
That makes sense. Oh, any others that you can think of?
Another one that's pretty common, actually, is I have a lot of customers that have very, very good credit, but not a lot of credit. In our business, we call that thin credit. And you'd say, oh, that's good. They don't have very many. They only have one credit card. Well, no. In some of the guidelines, depending on the products, you actually have to show that you have more history of paying bills. And this has just been an interesting time. Like I'll have customers that maybe they only have one credit card, excellent credit score, but their name isn't on the current lease that they live at, and their cell phone's being paid by their company. And so we trying to find other bills so we can, reflect that on the credit report just to show that you can pay bills, that you have a history.
Mm-hmm.
And sometimes that's not very easy. They don't have utilities where they live. It's part of some,
the lease.
So I'm down to, okay, do you have a New York Times subscription? If we're at $9.99 a month, I'll take it.
Have you paid it for 12 months?
Exactly. Yeah. So simple things like that come up, which seem nonsensical, but they're the guidelines. So we have to kind of get the data and do the work and help clients understand like everything is okay, but this is what we need to do.
I find those clients tend to be people who come from other countries to work, because I work in the Bay Area. So we get a lot of folks that come from other countries to work at tech companies, and they might have credit at home, but they don't have it here established. Right. It's less young people who are just starting out because they usually don't have the money to buy in our market, but it tends to be those, work visa folks that are trying to rapidly build credit so they can get into the housing market.
Teed up another interesting topic. So visas are complicated.
Yeah.
And there's a long list of ones that are eligible for financing versus not. And also, what is your current status? Because people will say, well, I have a green card. Well, it's actually not here yet.
Oh.
It's applied for, but we don't have the final approval or it's in status. We do DACA loans where we are, and we can make sure that things are not expired. I had one customer that had a certain kind of visa that was eligible.
Mm-hmm.
Visas have expiration dates, so you generally will check those. And the customer assured us that the company she was working for was going to or has reapplied for the next step. So we looked at that expiration date, said, okay, fine, she's applied. But it turns out the company hadn't applied for the next step.
Oh, no.
And so it's impossible to speed up the company's process, right, on the visa. So she wasn't ready to buy. So
wow.
That was very disappointing. Yes, very disappointing. So again, knowledgeable, trying to do as much questioning with the customer in advance to uncover these things. Because they don't mean to like hold anything back, but unless you bring it up, sometimes it might not come on the topic list.
Mm-hmm. And as an agent, it's kind of, you can't, I don't really feel comfortable putting a list of those things in front of a client, being like, can you check a box? But you want to be listening when you're talking to people, in those first few meetings, and they're talking about their goals and you're getting to know them. You're really making mental notes around is there anything here I need to follow up with, or lob it to Barbara when she meets with them and say, these things came up in our conversation, and I think maybe we want to just check the visa. Like, these are the things that are red flags for me. Maybe you'll get to the bottom of it when you look at all their financial records. So,
super helpful that you do that. Just the good listening part for me is also something I really, really try to do.
Mm-hmm.
Give them a chance to tell you what's going on, and then more questions will come.
Mm-hmm.
And that's a good skill to have.
Yeah, I think so too. I mean, listening it gives you so much more information than you would have if you're focused on your agenda, getting information to them rather than first getting all the information about what they are trying to achieve, what hurdles might be there, and then helping them be successful is so much more efficient,
Exactly.
And so, I wonder, we talked a lot about green flags, with lenders. I mean, when on the flip side, when you're working with agents, what are the things that agents can do? We talked about a few of them, but maybe you could add a little bit more. What are some things that agents can do to really make the process smooth for you?
Well, Steph, I like it when the agent, I'll use the analogy, the captain of the ship. When you're sailing, there's a captain, the first mate, and all the other crew. And I feel like the agent's the buyer's agent is in the position of playing captain. And if you take that position, you're going to set everybody else for success. So you bring the crew together. You identify everybody to each other. You map out the terms, the timeline, concerns if there are any, and who's doing what. So everybody knows what lane they're in. So I like it when the agent takes charge and actually does that introduction electronically, of course, because we're not all in the same room. And so from there, everybody's in their own lane doing what the agent has asked us to do delegated to us. And so delegation take role to make sure that all the folks are doing what they're supposed to be doing. We're supposed to be reporting back to the captain as well. But also we want to make sure that we know each other, and you're going to be the person to navigate the questions. You mentioned something earlier when we were chatting, about the client having a question. So you spend a lot of time with the clients, probably more than anybody else in the transaction. And they're going to be having conversations and not really sure who to talk to. So you're directing the traffic back to, so you're, I guess, the hub, and we're all the spokes. So you're directing back saying, well, okay, that would be a great question for the insurance agent. And that will actually impact lending too. Let's get Barbara on board on that question too. So helping them to know where to go. For each piece. So I really feel like that's a successful component as an agent, if you can play that role as captain and think about it that way. Because there are things that happen that impact title. Well, guess what? I need to know about that too. And if you're only talking to title, or title's doing it in a vacuum, then it could slow us down or make us not meet our deadlines. Thing. So
like recording something between buyer and the neighbor in the condo association and not telling the lender that it's being recorded.
Exactly.
That happens. These things happen.
Or, someone was intended to be added to the title. Like, oh, yes, I wanted my mother on title. Okay. Well, we need to know about that too. And guess what? So does the insurance agent. And so I feel like a lender that can focus on that and really have that mindset is going to make a much better transaction for them.
Yeah.
Much safer, less stress. Super successful, happy customer.
Agreed. Yeah. And I'll say as an agent who, speaking from a lot of experience, once you have a team of people around you that are highly capable, you don't need to do so much, being the in-between person. You don't need to go get the information for your client from the insurance provider. I think I see a lot of agents over-functioning in this way. They're taking their captain role as like, I'm running the ship and I do all the jobs too.
Well, a captain's supposed to delegate.
Yes. Thank you. And so delegate because you've surrounded yourself with a team of people that know their job, are excellent at what they do, are good communicators. They check all these boxes, right, that we've laid out for all your people, your lender, your escrow officer, all the other players, the insurance provider. And when you have that team established and all those people are on board, you can confidently say, I could guess, or I could talk to you for 20 minutes about your fears around this question. But the truth is, Barbara, we just need to get you on the phone with her and she will solve the problem. Or your insurance provider, the same. And I think, and then back away and let your partner shine. Let your partner do their job, deliver, be the hero in that moment, and don't step in and need to take credit for everything. I think that's a puddle that young agents in particular, are trying to prove themselves can step in. And I think you're more powerful when you just surround yourself with really high quality people and let them do what they're best at. So
yeah, because we, from my perspective, I'm not writing contracts. I'm not an expert at that. I don't know what to look out for if you're looking at a building with a customer. Like, are you worried about I don't know about those things.
Yeah.
And nor could I ever give advice on that to the customer. So we do need to lean on our strengths and our skill sets and be okay with not knowing.
Yeah. I mean, I will say to agents listening, if you're a classic overfunctioner in this way, how would you feel if your lender said, your client asked your lender a question about the contract and your lender said, well, send me the contract and I'll interpret it for you. She'd be way out of bounds in terms of what her expertise should be. And so, just be mindful of that, I think, and really, lean on your team. You built it to be a resource for you and your clients.
And there is a lot of crossover on, with contracts. We have this contingencies that come up in conversation for our piece of it all the time. But this is like one of these early on conversations. I always say, well, you're going to talk to Stephanie a lot about this later, but this is kind of what it means in general to start up, because they ultimately get to choose whether or not they're going to put that down in the contract as waived or not. I just say my role is to make it an option for you to do that.
Yes.
But talk to Stephanie.
Yeah.
Because you may change your perspective on the contract based on the actual property or other factors. And that's where they need to lean on you. So I don't try to get too far down that path, because that's really where you guys will shine.
And the line's a little blurry. I mean, there is overlap there where we need to be both communicating, especially around contingencies around appraisal and loan, that those two contingencies are so important to have buyers be educated by both the real estate agent and the lender, because then only then do they have the full picture of how their particular financial profile will allow them to move forward, and then they can make an educated choice. Yeah. So you're a direct lender. You work with Chase, and so I often, you're the first person that I tend to send clients to. I love it, even if they for some reason can't use you. I love to have them double app with the person that's my preferred lender, just so we have a backup. But I wonder if you could talk a little bit about, different maybe buyer profiles or who might benefit from working with a direct lender, and what the difference is really between a direct lender like a Chase or Wells Fargo, or another specific bank, versus a mortgage broker. And just give us some nuance between the two and what an agent might use to decide, who do they want to partner with in terms of their, go-to first, their first person that they would call.
Yeah. I think, a smart agent, one that really wants to build their business, needs to have multiple partners in that area. So maybe you have multiple direct lenders that you work with because you have different clients and they're going to have different needs, but also, a mortgage broker as well. So a direct lender, like a Chase or Wells Fargo, a Citi, they're lending their own funds. A mortgage broker is the intermediary, which is sort of reaching out to a bunch of other banks to see what's available. So different products that are available, but they're the intermediary. So it's not their own money. One of the differences I think is with the direct lender, and I've done a bit of both. We have relationships with all the people that are working on your loan, direct relationships. So in a loan process, I'm sort of the initial front, person to deal with the customer relationship and all the process itself. But we have the whole team behind us, which is like the underwriting and the processing and the people that actually generate the loan documents and things like that. And all of these people all work for the same bank. And so we have a 20-year relationship, and that matters. Whereas a mortgage broker, if they're working, let's say, with a list of 20 different lenders, they're not going to have a direct relationship with an underwriter. So, and the reason why I say it matters in our market in particular, number one, complexity. We have the benefit, the luxury of sometimes working with customers that are very financially complex. And so having a tight relationship with your underwriter who you can really collaborate with is meaningful. And I've had that a lot recently, particularly with the tech industry and a lot of different compensation packages. It gets a little bit complex, and having someone that you can actually, their phone number, you can dial them. That's important. And also speed too. Not having, as an intermediary, you're one of many, many brokers that they're working with. And so you don't necessarily have priority. But I'm, face to face with the same folks. So I like that a lot with that relationship. I think it's super helpful, and getting exceptions too. Sometimes clients don't meet the guidelines, and sometimes we can ask for exceptions. And this is our own money that we're lending. So, if it's within the comfort zone of our credit risk department, we could potentially get an exception. So we can do that because it's our own funds.
Yeah.
But on the flip side, so you're a new agent. There are some products that maybe a mortgage broker will have that just a big bank doesn't. So for example, in my case, I don't have a bridge loan as a product.
Right.
And so you have customers that will need that. So you need to have in place, a broker that would maybe have some of the more niche products like a TIC loan.
Correct.
Or a bridge loan, something like that. So that is key and important so that you can serve your clients depending on what they
need. Yeah. The bridge loan in particular is something that I've had multiple clients over the years use, because they don't quite have the money to buy the new house, although they can qualify in a couple of different ways to carry one house. I did it myself, carry one house while you're purchasing the other house. And there are lenders that have those products. And so, yes, it's important to have other people that you can call and say, okay, this particular file with this particular client requires us to get more creative than that person can do. And I think the mistake agents make, especially new agents, is they have one lender, they send their client to the lender says, I can't do that loan. And maybe the lender is not as generous and doesn't say, but someone else can, or refer you to somebody who can. And so then they stop. And as you said, you have to kind of have a can-do attitude and start to say, okay, well, that lender can't. Let me reach out to my colleagues. Let me talk to some mortgage brokers that I have in my back pocket and see if we can get this done another way. So, very good. Well, I have always appreciated working with you, Barbara.
Likewise.
And I know, I hope I know when I get busy, I maybe don't communicate as much as I could. I'm working on that piece. I'm going to be a better captain now that I heard you say that.
Yes, you fit the profile. You're a good captain.
Okay.
But, to that end, we all can improve, right? So,
absolutely.
And that's what keeps it fun and interesting. And, it's a very dynamic business. So, every year something different, every client something different.
Yeah. As soon as we have it nailed, then
it changes.
Everything changes. Yeah. That's right. That's the one constant we can depend on. Well, I really appreciate your time today, Barbara. It's so nice to see you in person. It's been a while.
It's been a long time.
And,
thank you for inviting me.
Yeah, my pleasure. Okay. Thanks for coming.